Hello everyone, this is Big Money Chasing Big Money by copytrading on Bitget. This is the second episode of the passive income series to conclude this insane, turbulent January of 2023. The month was full of extreme situations and unexpected moves in the market, so it is absolutely crucial to see how the traders handle these situations, and most importantly, am I going to close the month in profits or not? Before I reveal the results though, let's see what happened. The first week of the year was pretty boring, with not a lot of movement after the holiday period. On January 12th, however, the US inflation data for 2022 December was released, which came in at 6.5%, a number that was perfectly in line with expectations. As this was 0.1% less than the previous month, investors basically considered that the war against inflation was won and it's only going to get better from here, and the Fed will start to change its strategy. This was enough to ignite the fuse on Bitcoin's rocket, and the price shot from basically 18k to almost 24k, which is about 34% rise in just over 2 weeks. What were my traders doing during this time? They were opening short positions. Now the question comes obviously, were they correct to do so? In hindsight, it is very easy to be wise, but honestly speaking, I could have never imagined such a big move that started from a number which came in as expected. I mean, if you look at the chart and consider that this was the magnitude of the move as the FTX collapse was happening, you could expect a similarly major event to happen for a move in the opposite direction. But the only positive event was that the inflation numbers were not surprising at all. Also, in terms of RSI, even the day before all this, it was already reaching overbought territory. The chances of moving up from here would have been quite minimal. Anyway, I'm not trying to defend the traders, but it's important to understand that from a purely technical point of view, opening shorts was actually correct. I saw some figures that were indicating that over $1 billion worth of short positions were liquidated from the markets in just a few days during this pump. After this happened, I checked the other traders on the platform just to see if anyone actually managed to ride this wave out successfully, but most of them were massively in losses. So how did my traders handle the situation? I copied two traders, one of them is Da Vinci and the other one is One Monkey. Da Vinci closed his shorts halfway up. I am not sure if this was the right thing to do, but he was probably trying to play it safe by cutting losses. This was rather painful as the realized loss was around $100, which is 20% of my initial budget right off the bat. As you can imagine, I was really not happy about this. One Monkey, on the other hand, still has all of the shorts open. He only closed the positions which were in profit, so this means that he is expecting a major correction to the downside. The following week, Microsoft released their quarterly earnings, which were beating expectations, but the general outlook for future growth was rather pessimistic, so markets started to correct downwards. A couple days later, Tesla reported better numbers than expected, and also revealed that they actually still hold a considerable amount of BTC on their balance sheets. This gave another pump to the price of BTC, pushing it above 23k. Now, seeing all this volatility, I decided that it is best to fasten my seatbelt here. I converted my emergency BGB fund to USDT and loaded it up to my futures account. This gave me a peace of mind as the liquidation levels are above 31k at the moment with 49 positions opened, so this is quite comfortable for me. Now, let me show you the result. Interestingly enough, the closed trades ended up being green. This means, of course, that the amount of closed trades in profit is bigger than the positions closed in loss. So, all things considered, this is quite reassuring. Needless to say, it is very far from the 10% profit I wanted to achieve, but anyway, still better than closing the month in red or getting liquidated. I really hope the traders will manage to turn things around, and in the next video I will be able to share some fantastic results with you. By the way, don't be surprised by the fact that there are two OneMonkey accounts here. In the first episode I mentioned that the original account was full and I started following a secondary account, or maybe it's a copycat. Anyway, as there were massive liquidations in the market during this pump, of course some slots got opened up, so I joined and copied the OG. However, as the secondary account still has some positions open I didn't unfollow yet, I will do it as soon as the dust settles in the markets. Now, what do I expect from the next couple of days? Well, to make things even more interesting, tonight the Fed will announce their interest rate decision, which is currently expected to be an increase of 0.25%, which is a decrease from the previously expected 0.5%. I think Jerome Powell will eventually go along with this, which is also the market consensus. So what is going to be even more important is the press conference afterwards. Here the investors will try to read between the lines of anything Powell says, if he's being optimistic or pessimistic about the near future. The focus will be on the upcoming interest rate decisions, looking for clues about a possible time when the Fed will start to cut back interest rates. There will be major jumps up and down, no question about that. Personally, I would be very much surprised if the press conference ended on an optimistic note. To add more spice to this week's events, some major tech companies like Meta, Apple, and Amazon will also release their quarterly earnings. These can also apply major pressure to both buying and selling, so turbulence in the markets will go on throughout the week. Alright guys, this is all I have for you today. As always, feel free to ask questions if you have any. I will try to answer all of them. The next episode will be published on schedule on the 1st of March. Until then, trade safe, big money out.